All right, so you're looking ahead to 2025 and thinking like, is this the year I finally jump into crypto trading? Smart move. There's definitely a buzz. But sorting through all the noise can be tough. So you've handed us a stack of articles and research, and we're ready to give you the deep dive. Think of this as your cheat sheet to what really matters.
What's fascinating is that 2025 is shaking up to be a sort of perfect storm for crypto. You've got major tech advancements on the horizon, the regulatory landscape is in flux, and of course, there's that inherent crypto roller coaster of volatility.
Okay, so let's jump right into the heart of it. Why is 2025 being touted as such a pivotal year?
Well, a lot of the excitement is centered around a couple of key events. One of the biggest is the Bitcoin halving, scheduled for sometime in spring 2025. Now, this happens roughly every 4 years. And to understand why it matters, we need to go back to the basics of how Bitcoin is created, through a process called mining.
Right. Mining is basically the backbone of Bitcoin, where powerful computers are solving complex math problems to verify transactions and secure the network.
Exactly. And the miners receive Bitcoin as a reward for their efforts. But the interesting thing is, this reward gets cut in half every 4 years, hence the halving. And historically, whenever this has happened, we've seen some pretty significant price surges.
So, is this like a supply and demand thing?
Precisely.
Yeah.
Suddenly, new
Right.
Bitcoin becomes scarcer. And that scarcity can drive up demand, pushing the price higher. But there's another layer to this. The halving is also a clever way to control inflation. It's like a built-in mechanism to ensure that Bitcoin's value doesn't get diluted over time.
Wow. That's actually pretty ingenious. So, even if someone isn't planning to trade actively, this halving event could still impact their Bitcoin holdings.
Right, absolutely. It's a major market event. That tends to ripple through the entire crypto space.
Yeah.
The other big piece of the 2025 puzzle is the anticipation of regulatory changes. Governments around the world are still figuring out how to approach crypto, and the decisions they make will have a huge impact on the market.
Yeah. It's almost like a waiting game, with everyone on edge to see which way the regulations will swing.
Exactly. Right now, a lot of institutional investors, the big players with deep pockets, are hesitant to jump into crypto because of the lack of clear guidelines. It's just too much of a regulatory gray area. But if we start to see more concrete regulations, it could create a more stable environment, potentially attracting a flood of institutional money into the market.
So, on one hand, you've got this scarcity-driven price surge potential with the halving event. And on the other, the possibility of a wave of new investment if regulations become more favorable. It's almost like two massive forces converging on 2025.
It's a fascinating situation, and it's creating a lot of anticipation. Let's be honest, a
Evan?
fair amount of speculation, too.
Okay. But before we get too carried away with all this potential upside, we need to address the elephant in the room. Crypto is notorious for its volatility. We're talking about some wild price swings.
Right. Oh, absolutely. It's the nature of this beast. Remember the Bitcoin bubble of 2017 when the price skyrocketed, only to crash back down the following year? That's a prime example of what we're talking about. And that kind of volatility can be exhilarating for some, but it's also a major risk factor.
I imagine it can be quite a roller coaster ride. So how do you navigate that? I mean, if you're thinking about dipping your toes into crypto trading, how do you balance that potential for huge gains against the risk of, well, losing your shirt?
That's the million-dollar question. And it leads us to the heart of what any responsible trader needs to understand: risk versus reward. It's a delicate dance, and one that shouldn't be taken lightly. The allure of striking it rich can be intoxicating, but the potential for losses is just as real.
So where do you even begin to make sense of this? If someone's new to crypto trading, where should they start?
Education is absolutely paramount. Before even thinking about putting money into crypto, you need to understand the fundamentals. And I'm not just talking about knowing the difference between Bitcoin and Ethereum.
Right. There's a whole ecosystem to wrap your head around.
Right. Exactly. You need to understand how blockchain technology works, the risks involved, the different trading strategies, and the factors that influence market movements. Think of it like learning a new language. You wouldn't expect to write a novel without first learning the alphabet and basic grammar.
Okay. So where do you go to get this crypto education? Are we talking university courses here, or are there more accessible options?
Luckily, you don't need to enroll in a formal program. There's a wealth of information available online. Reputable websites like CoinDesk and Cointelegraph, online courses from platforms like Coursera and Udemy, even active forums where you can engage with experienced traders.
So you're saying that the crypto community itself can be a great resource.
Absolutely. There's a vibrant community of enthusiasts out there who are passionate about sharing their knowledge. Don't be afraid to ask questions. Participate in discussions. and learn from others' experiences.
That's a great tip. And I imagine having a network of people to bounce ideas off of can be invaluable, especially when navigating such a volatile market.
It can make a world of difference. Now, once you have a good grasp of the fundamentals, the next step is choosing a trading platform. This is where you'll actually buy, sell, and trade your cryptocurrencies.
I imagine there are quite a few options out there. How do you even begin to choose?
It can feel overwhelming, for sure. But there are some key factors to consider. Security should be your top priority. You want a platform with a solid reputation and a proven track record of protecting user funds. Look for features like two-factor authentication and cold storage for added security.
Right, because the last thing you want is to wake up one morning and find your crypto holdings have vanished into thin air.
Exactly. Then, of course, you need to think about fees. Different platforms charge different fees for trading, deposits, and withdrawals. So compare those carefully. And user experience matters too. You want a platform with a user-friendly interface that's easy to navigate, especially if you're new to trading.
So finding a platform that fits your comfort level is important. You don't want to be fumbling around with complex charts and jargon if you're just starting out.
Precisely. And don't underestimate the importance of good customer support. If you run into issues, you want to be able to reach out for help quickly and efficiently.
So to recap, we've got security, fees, user experience, and customer support as the key factors to weigh when choosing a platform. That's a great checklist. Now, let's say you've done research, you found a secure platform, and you're ready to dive in. Do you just go with your gut, or is there a more strategic approach?
Jumping in blindly is never a good idea, especially with something as volatile as crypto. That's why having a trading strategy is crucial. It's like having a roadmap to your financial goals.
Okay, so what are some of the trading strategies people use in the crypto world? I've heard terms like day trading and swing trading, but I'm not really sure what they mean.
Let's break it down. Day trading is exactly what it sounds like, buying and selling cryptocurrencies within a single day, trying to capitalize on those short-term price fluctuations.
So it's all about speed and timing, catching those micro movements in the market.
Precisely. It's a fast-paced, high-risk strategy that requires a lot of attention and expertise. Not for the faint of heart. Then you've got swing trading, which involves holding cryptocurrencies for a few days or weeks, riding the waves of market swings.
So it's a bit less frenetic than day trading, but still requires active buying and selling.
Exactly. And then there's long-term holding, or HO dealing as it's affectionately known in the crypto community.
Ah, yes. The HO dealers, the true believers.
Indeed. They buy and hold cryptocurrencies for months, years even, with the conviction that they will appreciate in value over the long term. It's a more passive approach, but it still requires careful research and conviction in the underlying assets.
So it sounds like there's a strategy out there to fit every personality type and risk tolerance.
That's the beauty of it. But here's the thing. No matter what strategy you choose, managing risk is absolutely paramount. We can't stress this enough. Crypto is inherently unpredictable, and even the most well-thought-out strategy can go awry.
So what are some of the ways to mitigate that risk?
Well, we touched upon diversification earlier, and it's worth reiterating here. Don't put all your eggs in one basket. Spread your investments across different cryptocurrencies, and even consider other asset classes like stocks or real estate to create a balanced portfolio.
Right, so if one investment takes a hit, the others can help cushion the blow.
Exactly. It's about managing the inevitable ups and downs of the market. Another crucial tool is the stop-loss order.
I've heard that term thrown around. Can you explain what it is and how it works?
Think of it like an insurance policy for your trades. It's an order you place with your exchange to automatically sell a cryptocurrency if it drops below a certain price that you set.
So it's like an emergency brake that prevents your losses from spiraling out of control.
Precisely. It helps you stay disciplined and avoid making emotional decisions when the market gets turbulent, which can often lead to bigger losses.
Okay, that makes a lot of sense. So we've got diversification and stop-loss orders as key risk management tools. But beyond the practical steps, is there a certain mindset that's helpful when navigating the crypto world?
Absolutely. It's about staying level-headed, managing your expectations, and understanding that crypto is a long game. Avoid getting caught up in the hype, don't chase quick riches, and be prepared for the possibility of losses.
Right. It's about approaching crypto with a sense of informed optimism, understanding both the potential and the pitfalls.
Exactly. And always remember, knowledge is your best weapon in this space. Stay informed, keep learning, and never stop asking questions.
So we've talked about the hype surrounding 2025, the potential upsides. and the risks involved. But let's get down to brass tacks. Is 2025 really going to be the year for crypto, or is this just another wave of hype?
That's the million-dollar question, isn't it? And unfortunately, I don't have a crystal ball. But what we can do is look at some of the factors that might influence whether 2025 lives up to the hype or fizzles out.
Okay, so what are the big things to keep an eye on?
Well, one of the biggest is the global economic climate. Remember, crypto is still considered a speculative asset, which means its value can be influenced by broader economic trends. If we see a global recession, for example, that could lead to a decline in investor confidence and a pullback from riskier assets like crypto.
Right, so it's not just about what's happening within the crypto world itself, but also what's going on in the world at large.
Precisely. Things like inflation, interest rates, geopolitical events, all of these can have a ripple effect on the crypto market. But on the flip side, positive economic conditions could fuel further growth in the crypto space.
So it's a bit of a gamble, with external factors potentially swaying the market in either direction. What about within the crypto world itself? Are there any internal drivers that could make or break 2025?
One of the biggest is mass adoption. If we start to see more businesses, institutions, and even governments embracing cryptocurrencies, that could create a surge in demand and potentially lead to significant price increases.
It's almost like a tipping point, where crypto goes from being this niche thing to a mainstream form of payment and investment.
Exactly. And we're already seeing some signs of this happening. Some companies are starting to accept Bitcoin and other cryptocurrencies as payment, and some countries are exploring the use of blockchain technology for things like voting and record keeping.
So it's not just about buying and selling crypto on exchanges anymore. It's starting to integrate into the real world in tangible ways.
That's the exciting part.
Yeah.
But of course, there are also potential roadblocks to mass adoption. Regulatory uncertainty, security concerns, and the environmental impact of crypto mining are all issues that need to be addressed if crypto is going to become truly mainstream.
Okay, so mass adoption is a potential catalyst for growth, but it's not a guaranteed slam dunk.
Exactly. It's a complex equation with a lot of moving parts. And speaking of moving parts, let's not forget that the crypto world is constantly evolving. While Bitcoin and Ethereum tend to dominate the headlines, there are a lot of other exciting developments happening. Beyond the usual suspects?
Right. It feels like there's always a new coin or a new project popping up. What are some of the trends that you think will shape the crypto landscape in 2025 and beyond?
Well, one trend that's already making waves is NFTs, or non-fungible tokens. These are unique digital assets that can represent anything, from a piece of art to a collectible to a virtual item in a video game.
NFTs have definitely exploded in popularity lately. People are buying and selling digital apes for millions of dollars. It's wild.
It is a bit mind-boggling. And while there's definitely a speculative bubble in the NFT market right now, the underlying technology has the potential to revolutionize how we think about ownership and value in the digital world. Imagine a future where all of your digital assets, from your music collection to your online identity, are represented by NFTs that you can truly own and control.
That's a pretty radical shift. So NFTs are about ownership and digital assets. What about the metaverse? I keep hearing that term being thrown around, and it always sounds so futuristic.
The metaverse is essentially a persistent, shared virtual world where people can interact with each other, play games, attend events, and even conduct business. Think of it like the internet. But instead of browsing websites, you're actually embodied in a 3D virtual environment.
So it's like stepping into a video game, but with real-world implications.
Exactly. And the metaverse is a natural fit for cryptocurrencies and blockchain technology. Imagine buying virtual land, selling digital goods, attending virtual concerts, all using crypto. It opens up a whole new realm of possibilities for economic activity.
It sounds like something straight out of science fiction.
Yeah.
But it's actually happening right now.
It is. And then there's DeFi, or decentralized finance, which is essentially a way to recreate traditional financial services, like lending, borrowing, and trading, but without the need for intermediaries like banks.
So it's about cutting out the middleman and giving people more control over their finances.
Precisely. DeFi is built on blockchain technology and uses smart contracts to automate transactions, making it more efficient, transparent, and accessible. It's still a relatively new and experimental space, but it has the potential to disrupt the traditional financial system in a major way.
Okay, so we've got NFTs changing how we think about digital ownership, the metaverse creating new virtual economies, and DeFi shaking up the world of finance. It seems like there's a lot of innovation happening within the crypto space. But amidst all this excitement, there's one issue that keeps coming up, and it's a big one: the environmental impact of crypto.
That's a valid concern, and it's something that the industry is actively working to address. Crypto mining, especially for Bitcoin, can consume a lot of energy, which raises concerns about its carbon footprint.
I've heard that some Bitcoin mining operations use as much electricity as entire countries.
Yes, that's true in some cases. And that's why there's a growing push for more sustainable mining solutions, such as using renewable energy sources like solar and wind power. There's also a movement towards alternative consensus mechanisms that use less energy than Bitcoin's proof-of-work system.
Like proof of stake, which Ethereum is in the process of transitioning to.
Exactly. Proof of stake is much more energy efficient, and it's gaining traction as a viable alternative. The environmental impact of crypto is something that both the industry and investors need to take seriously. It's about finding a balance between innovation and sustainability.
Right. Because if crypto is going to have a long-term future, it needs to be environmentally responsible. Okay, so we've covered a lot of ground in this deep dive. We've talked about the potential for growth in 2025, the risks involved, the importance of education and strategy, the technological advancements on the horizon, the regulatory landscape, emerging trends like NFTs and the metaverse, and the environmental concerns surrounding crypto. It's a lot to digest.
It is. And honestly, we've only scratched the surface. The crypto world is incredibly complex and constantly evolving. And what we've discussed today might be old news tomorrow.
So how should our listener approach all of this information? What are the key takeaways?
I think the most important takeaway is that crypto is not a get-rich-quick scheme. It's a complex and dynamic space that requires careful research, a sound strategy, and a willingness to learn and adapt.
Right. It's about being an informed participant, not a passive observer.
Exactly. And if you're thinking about diving into crypto trading, make sure you're doing it for the right reasons. Are you genuinely interested in the technology and the potential it holds? Are you prepared for the risks involved? Do you have a clear understanding of the market and how it works? If the answer to any of these questions is no, then it might be wise to take a step back and do some more research before putting your hard-earned money at risk.
That's great advice. And remember, even if you decide that crypto trading isn't for you, there are plenty of other ways to invest your money and grow your wealth.
Absolutely. Diversification is key. Don't put all your eggs in one basket, whether that basket is crypto or something else. Explore different asset classes, from traditional stocks and bonds to real estate and precious metals. Build a portfolio that reflects your risk tolerance, your financial goals, and your vision for the future.
That's a great point to end on. It's not just about crypto. It's about taking control of your financial journey and making informed decisions that align with your personal circumstances. So to our listener out there, keep learning, keep exploring, and never stop being curious.
Well said. And if you ever need a guide on your journey, you know where to find us.
That's right. Thanks for joining us on this deep dive into the world of crypto trading. Until next time, happy investing.